Guys, welcome to Endgame Finance. Today I want to talk to you again about Rivian electric delivery van. I made a video about this yesterday. However, a lot of you guys told me the sound was really bad. Most of you guys could not hear what I was saying. So I want to do a do-over. The last few videos I did really notice software was messing up. So let me know if this is much better, if this is clear. And let's talk about these EDVs, electric delivery vans from Rivian, because I think these are one of the main bullish theses for Rivian into the future. These are one of the products that will determine how high their stock can go. This is going to be even possibly more important than R1 platform or R2 platform that's coming online. Now, what really makes EDVs really important is their ability for last mile delivery. Last mile delivery is basically taking the goods from a warehouse, centralized warehouse, to the customer's doors. And this is one of the biggest expenses that most companies have. This is 41% of total logistics costs for the company, for Amazon, for Walmart, for Target. However, if they utilize electric delivery vans, these costs are reduced over half. They're reducing 50% costs in just gas savings and over 60% in maintenance, because most of these delivery vans that are doing last mile, they're doing a lot of stop and go. And that really does wear and tear on the engine, on the tires, on the internal combustion parts. You use a lot of gas because you're stopping and going, push and pause, push and pause. You're basically pushing that gas clutch nonstop and you're just guzzling so much gasoline. However, you're not having these issues with electric delivery vans because they're on batteries and their tires don't wear out as much because they have regenerative braking. Basically, once you brake, a lot of that force goes back into charging the battery. They also don't have the engine. They also don't require oil changes constantly that these other delivery vans with traditional combustion engines have. So, for example, if Amazon is spending $100 billion on their supply chain costs, $41 billion of that is just going towards last mile delivery. If they can reduce these costs by half, they're saving $20 billion every single year. And this is not just Amazon. This is Alibaba. This is Walmart. This is Target. This is pretty much every single retailer and online retailer. And guys, even more, these trends of online shipping are just going to continue into the future. People would just be ordering more and more packages. Basically, malls are dead. Nobody goes to the mall anymore to do their shopping. You order everything online and everything is shipped to your door, and everything that has to be returned. I believe only around 25% of people have never returned anything from a purchase they made online. So 75% of the people who shop online are sending those packages back to the retailers. So you have a lot of back and forth sending of packages. All of these require these last mile delivery vehicles. Everybody's shifting towards electric. For instance, FedEx targets 2040 for zero emission delivery fleet. FedEx has over 80,000 delivery vans making deliveries every single day. By 2030, that's going to be well over 100,000 vans, probably 150,000, because shipping is just a growing business. It's a growing consumer demand. So FedEx will need to electrify their entire fleet, over 100,000 units. The same is true with DHL. They want 60% of the delivery fleet to be electric by 2030. Same with UPS. United Parcel Service expects 40% of their delivery vehicles to run on an alternative fuel in just 2 to 3 years. So we can see the skyrocketing demand for EDVs. Last mile delivery transportation market size is currently $155 billion going into 2023. By 2030, that is expected to double. It's going to be a $300 billion market. By 2040, 2050, that's going to be well over $500 billion. Basically, there will be a demand for over $500 billion for electric delivery vehicles, not just vans. That includes bicycles, that includes drones. I believe Rivian is also really looking to get into electric bike delivery market. However, I believe 80% of that segment will still be dominated by electric delivery vans just because they're the most optimal for cargo space. EDVs are really a superior product. They're optimized for delivering packages. They're optimized for cargo space. They're optimized for driver visibility. They're optimized for drivers entering and exiting the vehicles. I believe they have rugged floors so drivers don't slip in snow. Every single driver I've seen drive this vehicle, that's spoken about it, is really praising it. They're saying this is the optimal, this is the ultimate driving machine. This is one of their favorite vehicles to drive. Even more, a lot of corporations are actually pushing for zero emission standards. For instance, IKEA wants 100% zero emission last mile deliveries by 2025. So they will only utilize companies that have electric vehicles. They will not use traditional gasoline powered services. And a lot of companies are coming on board demanding the same. So there's a forced shift towards electric delivery vans, especially in Europe. That's why I really see Rivian shipping their electric delivery vans before R1 or R2s to Europe and setting up these logistics hubs, just because Europe will have much stricter standards. One issue Rivian really has is that exclusivity agreement with Amazon. Amazon is most likely unable to get permitting for all the charging stations to utilize all the electric delivery vans Rivian is delivering toward them. So they're only taking 10,000 units in 2023. However, Rivian can produce much more. So Rivian is really trying to renegotiate this agreement with Amazon. And I think they will be successful just because Amazon actually owns 20% of Rivian. If Rivian does good, Amazon bottom line does good. So it makes sense for them to release Rivian from this exclusivity just because Rivian could produce much more than 10,000 units per year. And they will start delivering these vans to other companies like Walmart, like FedEx, like UPS, especially now that EDVs are, I believe, probably very profitable for Rivian, or will be in the near future, just because they're such a simple build. They're not customizable to the extent that R1s are. And they're utilizing many parts that Rivian themselves are building, such as the Enduro motor, such as the hardware and software integration, and the Fleet OS, the fleet operating system. Basically, whoever buys EDVs also has to subscribe to Rivian's operating system for fleet management. This is going to be a reoccurring revenue stream for Rivian. So the more vans they have on the road, the more vans they're selling, the more reoccurring revenue, that's pure margin they're just getting non-stop. If Rivian can capture some of this market by 2030, if they can capture 20% of this market by 2030, they will be pulling in about $60 billion in reoccurring revenues every single year. If you assign a 10x multiple to that revenue stream, we see Rivian being valued at almost, over $500 billion. They're currently a $20 billion company. So we can see a 20x in Rivian shares and Rivian stock just from this business segment. That's why this is so essential to Rivian, just to develop, just to start pushing out units. We're not even baking in these Fleet OS reoccurring subscription fees they will be bringing in, or the maintenance that they will provide for these companies. They will charge a fee. So this is going to be extremely lucrative business. This is possibly even more lucrative than their R1 and R2 segments. So that's it, guys. I just wanted to touch up again on Rivian's electric delivery vans. I see such huge potential in this business segment. On the last video, you guys told me sound was really bad. So let me know if sound has improved and if there's anything else you guys would like to see. Guys, as always, like, subscribe, and have a great day.